Mr. Harry, Mr. Ryan, are you right? Okay, so today we're going to talk something different, okay? We're going to talk about how the bank makes money.
I don't need to know.
You don't want to know?
I don't need to know.
For now, yeah, you don't need to know now because daddy and mommy pays for you, everything. But sooner or later, you're going to manage your money. You want to know how you can make more money with money, right? Okay? So Eric, you got the account, right? HSBC account, right? You put the money, how much money you have in your account? Let's say £100, okay? £100. You, Eric, you have £100 in your account. This is called current account. Current account. You have current account, you have saving account, right? Remember yesterday, I asked you to transfer the money from current account to saving account. The current account, right, is for daily use. So you have this card. You can go to the shop to spend your money. But when you put the money on here, it doesn't earn anything. So when the money,
it earns food.
No. Okay, so when you put your money in the bank, if the money does not grow, if the number is not growing, for example, like if you put £100 in the bank, and it's actually devalued, the value becomes less and less every day because the government is printing money. Okay, so it's called inflation. Inflation, right? You know that,
Why would
right?
I want more money?
Inflation. So why inflation? Because yeah, the government is printing money, and then the money you got, for example, £100. You have £100 now, but in a year's time, for example, in 365 days, the £100
Become 90.
No. The £100 purchase power, right? The purchase power becomes less. For example, like now, £100 you can buy 100 bottle of milk, for example. If a bottle of milk costs £1, okay, £1. But in a year's time, the price go up, right? Because the inflation, the price go up. It becomes like maybe £2, right? So £100 at that time in a year will only give you 50 bottles of milk.
What's the point of inflation if the government is trying to bring the prices down?
Good question. Okay, I'm not an expert on that, but you can tell me later, okay?
That will never happen.
Yeah, we'll do some research. Okay, so that's not the point today. So my point is that when you put the money in the saving account, right, the bank give you some interest to compensate for the inflation. So let's say if you put £100 in the bank, here in the saving account, and the bank will pay you £1 after a year. So in a year's time, the bank will pay you £1. So
It doesn't matter.
101. Okay?
No. It doesn't matter because you can still only buy 50 bottles of milk.
Yeah, I know. So that's right, because the bank is not very generous. They just give you the minimum interest rate. But however, you see, this is the bank, right? This is the bank.
Of course.
This is the bank,
It's not that it's not generous. It's that there's no.
Yeah, Eric, here is you. You put the money in the current account, okay? In the saving account. So basically, you are lending the money to the bank. So the bank has your money, and then in return, the bank pays you £1 after a year. £1 in a year, okay?
It's not that it's not generous.
It's totally the opposite of generous, okay? Yeah? Now,
No, I'm saying it's not that it's not generous.
then what's that?
Because there's a lot of people, so if
Lots of people, yeah, you're right.
Yeah.
Yeah, lots of people. So, there's another people and Ryan here.
another person,
Another person, okay?
another
Lots
person,
of
no,
them.
another person and they don't have any money.
Okay.
Yeah.
So, these are called deposits. So, when they
That's
put the
not how you
money.
write my name.
Yeah.
That's fun.
Okay, let's move on, okay? So, these, we call these,
Ryan.
we call these
Ryan.
deposits. So, the bank collects the deposits, okay? So, now the bank has lots of money from, lots of people, okay? Now, some people, they don't have money. They go to the bank to borrow money. Okay, they go to the bank to borrow money. Okay, this guy doesn't have money, but he needs the money to buy a house. We call it mortgage. Or he borrow the money, we call it loan, okay? Loan. If it's to buy a house, we call it mortgage. The people needs the loan because they don't have enough money to do something, to start a business. Loan. Loan, L-O-A-N, loan. Borrow money. But basically, look, this guy borrows the money from the bank. right? You are lending the money to the bank, so it's the other direction, right? This guy borrows the money from the bank. For example, he wants to have £100.
Wait, what did you say was the difference between loan and mortgage?
If the loan is used to buy a house, then we call it mortgage. Mortgage is a bigger loan, right? For example, if you buy this house, it needs £500,000, okay? And then at the time, I didn't have the £500,000, so I put the £100,000, and I need the £400,000 loan. I need to borrow the £400,000 from the bank, okay? And why the bank would lend the money to me? Because they do the research, right? Because I work for Microsoft, I have enough income to pay for the mortgage. So every month, I pay a certain amount of money to the bank as a repayment, and then part of it is interest. Okay. So here, for simplicity, this guy needs £100 from the bank. Okay, the bank lends £100 to this guy, but this guy, as an agreement, needs to pay £110 back after a year. £110 back. Okay, so the bank, where does the bank get the £100? From you. You put the money in the bank deposit. The bank takes your money to give this to lend to this guy. The bank pays you £1, but the bank takes £10 after a year. And how much money does the bank make? £9, yeah? Because this 110.
Then why give the money to the bank if it's taking £9 from you?
Good question. Because look, if you have £100, what can you make? Maybe the best strategy for you, £100, is to put it in a bank to earn some interest. But the thing is, the bank can collect money from millions of people.
It's not as
Yeah.
it's not as taking money from you, just making money.
Yeah.
Yeah, so takes money from you.
No, you're
That's how
not.
it gets money.
No, you're not losing the money you put in.
So when is it gonna pay you back? Because
Until you take it out.
Because every year you get £9. They take £9 and give you £1. Take £10 and give you £1. You're basically losing £9.
No, this is two different people.
No, you're not paying for £9.
For example, like,
You are, because it's taken from your account.
look, this is Eric, this is Ryan. Okay? Eric has £100, and you need £100. Yeah? So I'm the bank. You put £100 in daddy's pocket. Yeah? After a year, I give you 101. Okay? But in the meantime, this year, £100, I give it to you. You need a loan. Okay? You need to borrow money from daddy.
Yeah, so
but in a year, you need to pay me 110.
Yeah, I still have a 101.
Yeah.
So how are you gonna get that money if you can't afford it? Can't you just get another loan? Me.
In order for me to borrow, the bank to borrow money to you, to lend the money to you, right? To lend the money to you, I need to do a background research to see if Ryan is eligible. If Ryan has a job, right? Usually, if he has a job, then the bank will borrow the money, will lend the money to the people who want the loan. Okay, does it make sense? Of course, this is one scenario of the bank makes money. The bank also makes money in other ways. For example, like the credit card, right? Credit card is basically a short-term loan, and then the bank also charges the processing fee from the shop, the merchant. Okay, and the bank, if you go to the bank to withdraw the money, the ATM, there is a processing fee sometimes, right? If you also late for your payment for the credit card, something like that, the bank will also charge you. So the bank has lots of different business, right? The investment, etc. So, but this is, I would say, the biggest business model. Okay, because the bank collects the money for many these people, right? And then the bank has like £1 trillion, lots of money, and he can use the money to give a loan to people who will need. And the mortgage, the bank charges a higher rate than these, so it makes a difference. There's a difference, right? The bank gives the loan to the people who want to start a business, right? And usually, if you have a large sum of money, you can get a much higher interest rate. For example, saving £100, right? If you have £100, you probably earn like 1%. 1% APR. Now currently the interest rate of UK for the saving account is 4%, roughly 4%. But if you have, right, if you have 10 million pounds, you can go to the bank. If you have £1 million, if you know, in your account, you can go to the bank, sitting in a VIP room, and then negotiate the rate. And the bank will give you something like 8%, you know, higher rate because you have large amount of the money. If they don't agree, you just go to another bank. I think they will be very happy to take your money. Okay, any questions so far on this?
No. Why would they be happy?
The bank?
Yeah.
Because the one of the KPI, you know, key performance indicator, okay, the KPI of the bank is to attract the fundings. If they have the money,
I'm saying why would they be happy to increase the?
that's good. Yeah, that's very good. Because if you have £1 million, right, it's just like maybe 100 customers saving the money on average, right? So it's just like you representing 100 customers.
So the bank wouldn't be happy. The bank will just be pleased.
Yeah, please to take more money, of course, right? And then the bank, for example, the bank, usually if the bank has £100, right, and then need to have these something like £10, £10 to be available for cash withdrawal. Okay.
I thought you have to. The bank has to pay you interest every year. So the interest will be more if.
Yeah, but they're happy because yes, true, they pay you more interest. Yeah, but they use this large amount of money to make more money. Once you have £1 million, you can get lots of things done. Yeah, you can invest. Okay, you can invest more. Get it? But the basic thing, you know how the bank works, right? How the bank makes money. So the bank is the biggest stakeholder, right? So they got a lot of resources. So if you are able to get on hold on, you know, lots of resources, then you can make money in this way, right? For example, like lots of people are willing to give you the money, to lend you the money. You have this money, and then you can do lots of things. Yes, lots of things. Okay.
Yes.
Any questions more?
No.
Ellie? Okay, that's it for today. Bye bye. Bye bye.
Bye.
Bye bye.